There are three very important inflection points to pay attention to based on this data. Hey everyone, Kevin here. It's been about 2 weeks since we did an update on what's happening in the real estate market, and here's the scoop. In the last couple weeks of April, especially leading up to now this May time to pay rent, a lot more tenants across the country have either stopped paying rent or have started asking for rent reductions as this pandemic continues on. Well, today we have statistics on what's happening to sale data in April. Nobody else has this data yet because I've been working with some really amazing agents. Big shout out to them, by the way, to get this data from different parts of the country. We're gonna break this data down in a moment. I want you to see this trend that's happening specifically at the last part of April. It's a little bit scary. But first I wanna make a note about rentals and, well, tenants asking for rent reductions and not paying rent. This is going to be a very big problem for multifamily real estate, especially going forward for the next probably year or two. This might create a buying opportunity for multifamily real estate, but here's the thing. Multifamily real estate is valued on rents. If tenants are asking for rent reductions, which they are, in exchange for signing year-long leases, which they are, or they're not paying rent at all right now, and when they finally start paying rent again, they ask for rent reductions at that point in exchange for basically signing year or 2 year-long leases. What basically happens to an entire market of multifamily real estate? The prices have no choice but to come down. That's very simple because when you value multifamily real estate, and this is different from single family real estate, when you value multifamily real estate, you value it with cap rates and gross rent multipliers, which is just a really fancy way of saying you take whatever the rent is, you multiply it and divide it by a certain set of numbers, and boom, you get the value. Well, if the input, the rent, is lower, prices are going to come down. So multifamily real estate over the next year or two, probably gonna suffer a lot more than single family, although usually they stay together, so the entire industry could move together. But let's pay attention to this very closely. The point of starting off with this declaration is twofold though. Number one, do not buy multifamily real estate right now based on 2019 rents. You probably get screwed. Number two, don't buy anything that's been sitting on the market that's overpriced. Like a new construction home right now, it's not the time to do that, okay? Now's the time to look for deals below market value real estate, because if we see values, they've been going up, if they start trickling down a little bit and then they go up and down a little and then in the long term they go up again, you wanna be able to buy below all of that madness, which you can do. Obviously, that's what I teach you how to do in the programs linked below. Talk about that on the channel here often as well, but buy this stuff below market value. Be careful with multifamily right now. There's going to be a big adjustment in terms of values. But let's get into the data here for April. All right, first things first, this data would not be possible if it weren't for, well, me doing the California data, Claudio here bringing in data, Ed bringing in data, we've got Chad bringing in data, and we've got Kelly bringing in data. So if you are located in South Florida, Tampa, Orlando, Hennepin, California, whatever, like these are the people that you want to reach out to. They are on it. Every time I ask for data, they're like, boom, here's your data, Kevin. Wow, these guys rock. All right, folks, here's the latest data. In Ventura County, sales from January to April 2020, flat. Zero growth. Less days on the market and slightly less volume from January to April, which is very odd. Normally you would see many more sales, so obviously a reduction in sales. For Orange County, we actually lost value in April compared to January of 2020. Not the best change or sort of inflection point there for Orange County. LA, also flat, no growth the entire year. Oddly enough, Hennepin County is up 10% in value, and we're starting to see areas like Orlando and Broward County also boom up 7% in their sales prices from January to April, which is actually kind of surprising. It looks like Florida's rebounding a lot faster than California is, and Florida didn't really ever see a negative. We saw Palm Beach up 14%, Tampa up 5%, and Miami is up 11%, despite the number of solds in Miami substantially lower. Now, this isn't where we want to look at the trend, though. To understand where the actual trend is happening in real estate data, And in case you want to do this as well, this is what I teach you to do in my real estate investing course or my real estate agent course for agents, link below. Here's what we want to do. We want to compare the first half of April to the second half of April, because that's going to give us an idea as to what to expect in May, that inflection point. And I'll tell you, there's an inflection point in April. It's crazy. All right, so the numbers actually get worse when we look at early April to the end of April. Just from early April to the end of April, less properties sold, more days on the market. It's taken 23% longer to sell properties now, and properties are selling for less money. 1.5% in lost value in just April in Ventura County. Orange County lost a little bit of value, but it also took 18% longer to actually sell real estate during this time. LA County lost almost 1%, just the beginning of April to the end of April. Less properties sold, and it took roughly the same amount of time to sell those properties. Hennepin County, even though compared to January, they're way up, in April, they started losing value, about 2.6% in value, although they did sell properties faster and sold a few more properties. Orlando lost 1% in property value, although more properties sold, and it did take slightly longer. Notice this trend we're seeing. I'm going to summarize this in a second, but this is very interesting. Broward here, as a total anomaly, Broward County actually continued to see an increase in prices, quite odd. Palm Beach was flat, also took longer to sell real estate, and even in Broward County, it took longer to sell real estate. Tampa, flat in April, and it took way longer to sell real estate, 23% longer. Miami lost 3% from the beginning to the end of the month. And remember, in Miami, you have a lot of international buyers. 3% of the value's gone in just April, comparing the beginning part of April to the end of April. And days on the market up 7%. So this is actually a really interesting trend. Let's understand this. There are three very important inflection points to pay attention to based on this data that I just shared with you. Number one inflection point, which by the way, the blue line is prices, the green line here, this is going to be the number of sales. And so the first inflection point that you could see is obviously when this outbreak happened, sales stopped almost. We had this massive inflection point, and these are all the news articles that are like, oh my God, real estate sales are down like 25%. Yeah, we got it. The volume's down. Less people obviously want to sell a house during an outbreak. Less people want to buy a house during an outbreak. Got it. Interestingly though, from the first half of April to the second half of April, we still saw a slight decline in the number of sales, but not 25% declines, like maybe 5% less sales. So our second real inflection point that we want to pay attention to is that the rate of loss of sales that we're seeing has started to flatten. This is kind of like saying the flattening of the curve has hit real estate in terms of volume. That is, like, the discretionary transactions have been ripped off the market, and now we're still losing some, but not as many. This is also possibly a sign that people are now saying, okay, we're starting to reopen up. Let's put properties on the market again. So it's quite possible, if this trend continues, we could end up seeing more properties hit the market. And this hasn't happened yet, but this could end up being our summer or Q3 boom, kind of like a delayed real estate market, just taking the spring and turning it into like a late summer, maybe a fall market. That has not happened yet though, so that's speculation. We have no idea. A second wave could obviously plummet the sales volume again. Again, green numbers. Okay. Now, let's just focus on pricing for a second. Pricing is here. We went into the year very, very strong. When the Roni hit, we immediately saw pricing actually stay strong longer. You could see pricing stayed long for, stayed up at least, or stayed strong for probably another 2 or 3 weeks, because remember, it takes time for our real estate actual sold prices to show up. So we had strength continue. Then we saw prices flatten at the end of March as kind of that early February data started indicating a slowdown. Now we're starting to see, now that we have all of April and we can compare the beginning of April to the end of April, now we can start seeing prices go down. But remember, what does the second half of April refer to? If we look at data from April 16th to 30th, these sales are not representative of April 16th to 30th. We know that. They're actually representative of probably March 1st to March 30th. This was the bad time. This was the fear zone. This was like the world is ending. The stock market circuit breaker keeps freaking out. This was it. This was like the end. This was the beginning of the mega crash. The worst days, by the way, were March 23rd and April 3rd. Those were our tentative stock market bottoms. Now, the fact that the second half of April data, the 16th to 30th data, only showed a modest decline, in most cases flat since January, with a modest decline, is very, very good. The fact that we've only seen maybe 1 to 2% in shifts within April is a very good sign. It is possible that because a lot of drama happened that last week of March and that last week or the first week of April, it is possible that we might see this decline continue to where we go from a loss of maybe 2% in values to a loss of somewhere at max, at least tentatively based on this data, somewhere around 5%. But if this trend picks up where we start seeing more inventory come up again, then it's very likely this 5% reduction is going to be very temporary. So what does that mean for us? Well, if you're shopping for deals, if you're interested in getting below market value real estate, well, you know you ought to be in the program down below. But let me tell you timing in terms of when to buy. Well, first, you got to get your 2 free stocks with Webull. When you deposit $100, you get 2 free stocks with Webull, valued up to $1,400. And if the stock market stresses you out, then make sure you get life insurance, which you can sign up for within 5 minutes on your phone. Link down below, super easy. Some folks are like, Kevin, I can do it in 2 minutes. I'm like, dang, you signed up for and Apple paid for life insurance in 2 minutes? Man, the world has changed. Anyway, this is the bottom line that I see for real estate. If you want to buy wedge deals, my guess is, and I hate to sound like this because it's like, oh, of course, he's just a real estate agent saying buy. No, I mean, based on this, as long as we don't see a massive epic second wave, we're probably gonna see the best deals end up closing at the end of May, maybe early June. Those are probably going to be the lowest price deals, which kind of means you ought to be buying now if you wanted to lock in that kind of pricing, which makes sense based on this data. You know, a couple months ago, I was saying, I probably want to wait a couple months before really going hard on real estate. Right now might be that time to kind of start opening up that book again, you know, looking at the Redfin, looking at the MLS, and hunting for those deals, at least based on this data. If things worsen and we see another inflection point, then obviously that's gonna be something we wanna keep in mind. But remember, it's always a good idea to buy real estate below market value. That way you're insulated from whatever ends up happening. You wanna get that nice 20% wedge cushion in there at the very least. So there you have the update. Make sure to subscribe, I really appreciate it. I know a lot of you still have that red button. Turn that red button gray. Hook a brother up, folks. Thanks so much, everybody. We'll see you next time.